Good morning, traders, and welcome back to the Forex Showdown. Yes, this is the Forex Showdown number 16th of the year so far. I got FxBigDog here, and we're going to go ahead and battle between us and see who can close their first two pairs first, and will be announced as the winner of the showdown. So get ready, and we're going to get started.
Whoa, man! I tell you, Cameron, it is decision time. Specifically on the New Zealand CAD, I am getting my ass whipped on the New Zealand CAD right now, and I'm making some decisions by today to see what's going to go down. Now I'm going to go ahead and let the traders know, students. I'm going to let you guys know exactly how I manage my positions and the decisions I make when it comes to certain levels in the market, especially when it comes to drawdown. I'm going to be talking about that in today's session, but of course today is all about trading. We're going to go ahead and pick up some trade opportunities this morning and see if we can go ahead and get some profits generated in some of the pairs that you may not be trading. Now, remember, traders, this is not we're not passing on any advice on any trades. We're just telling you exactly what we're doing and how we're doing things. And of course, if you want to follow, that's up to you. Also, remember that this is for educational purpose only, and we are not advisors. So with that being said, traders, Cameron, we're going to go ahead and get started because I've got a lot of stuff going on today. And one of those decisions is, of course, to see how I'm going to manage my positions. And I definitely want to get into that conversation. So let's go ahead and leave that conversation for, let's say, midway in our session. So we can go ahead and take a look and see what's going on with the market right now with regards to some trade opportunities. And I'm going to go ahead and pull up the currency strength dashboard. And we're going to go ahead and talk about that. In the meantime, I think what we're going to do here is, let me go ahead and pull this up first. And if you want to go ahead and share with students just a little bit about what's going on in your trading room and how they can get involved in your trading room, Cam. You're muted.
Thank you for that. Yeah, training room. VIP member. Got to go ahead and sign up for the Starter Pro, become a VIP member, and you'll have access to our Discord server where we have all our chat signals, channels, and our signals as well, exclusive signals. And you also get the Pip Hunter tool that you see us using in the show to place trades. You'll have access to that tool. And also, you'll have our live sessions with me every Monday to Thursday. Every morning, we go ahead and dive into the market and make some trades during live sessions. So you have access to all that as a VIP member. Now, also becoming a VIP member, you also get you also have the option to get access to the VIP trade replicator as well. So you'll be connected to those signals as well if you choose that option as well.
All right. Awesome. And just a couple of things here. We are still holding a position in the CAD Swiss from last week, Friday. So we're not going to add the CAD Swiss into our trade analysis today. We may go ahead and look at the CAD Swiss and just talk about it overall, what we anticipate to happen on the CAD Swiss. But we're going to look at the US dollar CAD, New Zealand CAD, Aussie CAD, and of course the Euro US dollar as well. So I'm going to go ahead and share my screen at the moment right now and go ahead and show you what we have. And we're going to go ahead and spin the wheel. And by the way, I hope everyone's having a great time in the market. I know that we are absolutely, especially on my trade ideas, we're stuck in two positions, CAD Swiss and the New Zealand CAD. And we'll have time to go ahead and talk about that again. For those that are watching, I will also talk about our position, how I've handled my own portfolio and how I trade my own portfolio based on funds that are traded and, of course, based on drawdown decisions that I make on my account too as well. So let's go ahead and pop this open right here. And there it is there. And we're going to go ahead and take a look at what currency pair is going to be the first one that we're going to go ahead and break down, analyze, and check out this morning. So let's go ahead and get started with the first pair this morning. And Cameron, I think you won last week, so you get to go first on the Aussie CAD. There we go.
All right, awesome. Aussie CAD. Okay, Aussie CAD. I'm just gonna go ahead and clean the house, like you say.
Do some housekeeping, right?
Housekeeping. Yep. So in my VIP sessions, I've been talking about that we expected this to be a reversal here at this resistance. Okay, and so far, price is breaking through this. We're kind of getting this extended move here on this wave. Okay, so I'm still expecting the turnaround, a reversal on this Aussie CAD here. If we take a look, let's just take a look here at the 4 hour. I'd like to see if there's any key supply that price is moving to. Right now, this is right here. There's some supply in the zone that price is actually sitting at from previously. So we had some nice good supply right here that price is sitting at. So we could definitely get some pullback here. Obviously, this is a key supply zone right here where this high of this swing is that Aussie CAD is moving to. But we always have these up and downs in the market. And looking at this supply right here, the price is sitting at, we could get a pullback. And I'm really anticipating a pullback after this extended fifth wave that I've been talking about in my VIP show. So going back to Aussie CAD here, let me see if on my oscillator here, oscillator showed. Let's go look at the 1 hour. So we'll take a look at the 1 hour again here. So here we are creating higher highs. Here's this low right here. Price could definitely move into this zone right here as it goes up and wants to pull back into the zone for some liquidity. We do have some negative divergence here. As you can see, these lows or highs are creating lower highs, and we are creating higher highs here with price. Same thing with the 50-minute time frame. You can see it's creating lower highs as we're creating higher highs. So I'm definitely expecting a little more push before price does want to pull back here. 20 pips would be all the way up here. That might be a far stretch here, as I'm seeing the MACD kind of slowing down as well as we're getting some divergence. So we should look for a pullback here. Let's see how many 20 pips and our pullback is. If it's right at this high here, is about 20 pips. And we should see price come back into this consolidation zone, even with these auto blocks and candle wicks that we have right here as well. So yeah, I'm expecting a pullback. Now, I do expect a little more rally here, just a little more rally before we see a pullback here. I don't know if it's going to rally 20 pips on the upside here. Let me go to the 5-minute time frame here. I just want to see on the 5-minute time frame. So here on the 5-minute time frame, you can see price is create some resistance here on this high. And we're seeing this resistance. I don't think we're going to break through this resistance here on this high right here on the 5-minute time frame. And we do have some candle wicks here showing that there's some liquidity. Price could have already came down, grabbed some liquidity right here, and expect to move north. So we could anticipate that price is going to rally up now that I'm seeing that there is some liquidity grab here on this candle wick.
It's a tough one. So let me play the devil's advocate right here. So if the market does move back up, do you think it's going to come back to retest the level that it's testing right now? And if it is, then even if you sell right now, because I see you're leaning more towards a sell based on that divergence, if you sell right now and the market does rally up and pick you up on a second position, it's not a bad thing if the market's going to come back down to retest the level that you got in at the first time.
Yeah.
Unless you see.
I'm seeing more of a sell setup here. Obviously, I'm seeing some divergence. I do expect a little move to the up north here. That's why I'm just kind of stalling here. I do see a little move here, and I'm wondering if price is going to go ahead on the 5-minute time frame here it's going to break through this high, and most likely, it can break through this high if it has that momentum, as we see Aussie CAD has been moving bullish. But I think I'm going to go stick with the sell. I see the divergence that's setting up here for me, and back all the way to these lows here is about 18 pips. Yeah. Man, unfortunately, I would love to wait for a pullback here and then just go ahead and buy in the market. Um, I think, yeah, this is a tough one. This is not how it's set up. I like to get in right now. I don't know if the sell is going to be enough. I don't know if the sell is going to be enough for this pullback. Let me
Well, I'm
take
starting
a
to
look
see
here.
US oil pushing up a little bit higher as well, and that could also help with a bit of Canadian strength that could push Aussie CAD bearish too. So that's just
Okay.
something as well to consider. So I
Yeah.
am seeing this, that we have hit a support level on oil, and that's looking like we're going to get a little push. I think we should see oil go up to about $79. Not quite now, but as we're moving close to $80 a barrel. So I think we're on a turnaround point. At least
Yeah.
the rally to 76.
Yeah. No. Yeah. I'm gonna go with the sell. I'm
Okay.
gonna stick with it with by the looks of the setup I have here.
Okay. And I think that that sell, I think that sell's actually in a good direction. I think the sell is probably a perfect entry right now. Well, not the perfect, but I think it's definitely in the right place. All
Yeah.
right. Okay. Cool. So you're in on that. Let me go ahead and spin the wheel again on and just to go back to the oil price chart right here. This is what I'm seeing here on US oil. If we go to the daily time frame, we can see that we definitely have got to this level right here as an area of resistance that's now becoming support for the market. It hasn't managed to get down to this level right here, but if I look at the daily time frame showing a little bit of indecision here from yesterday. We had a little spike up to the upside as well, which could also indicate that price could move back up again to retest those levels. We go to the 15-minute time frame. We're inside this range on the 15 here, but I think it was the 1 hour that gave me, yeah. But look at the 1 hour right here. We just come off the support right here. So there's a possibility for price to come back to retest this area, and that's at $75. So yeah, we could probably see about $3 a barrel rally on this one right here. So again, do expect this. Now we did have some news that came out this morning, and it was actually let's see at 10 o'clock. Do we have some news? Oh, that's going to come out in the next couple of minutes. So we did have some actually Canadian data that came out, which actually moved the market quite a bit this morning. If you change your filter and change the filter to include this data right here, which is low impact data. Now it's low impact, but it did create volatility. If you go back down below here, look at this right here. That's called the consumer inflation expectations. But also, this is the one right here that I think is the big one, is the capacity utilization rate,
You're killing
utilization.
me.
Yeah, I know you're killing me.
What are
I'm
you?
getting tongue twisted. Utility zation. There we go. Utilization rate. Jeez, I'm struggling this morning. Golly. Anyway, the point is, this actually, if you read up the data right here, this actually is how much utilities they use, the consumers use in manufacturing, building. There's a whole bunch of things that they use based on the industrial companies. And so when they are at the 100% capacity, that actually leads to higher pricing. And what leads to higher pricing is inflation, and what leads to high inflation, interest rate hikes. And so we got this actually pushing right here at 82%. That we're expecting it to be at 82.2, and it went to 82.6. And this is from the previous 82.8. So that's That's actually a positive number here for the, again, it's not high impact news, but it is something that did come out this morning and create some volatility for the market. And I'm going to be honest with you, the Canadian crosses right now are actually at levels where they're very volatile right now. We've seen the market actually, all the Canadian crosses, really the Canadian losing ground, specifically on the New Zealand CAD, knowing that the New Zealand CAD is strong. They've got strong GDP. In fact, it's a very stable currency. They've got strong GDP. They've got good tourism in the country, which is helping with the GDP. They've got a good unemployment rate. So there's a lot of good things happening in New Zealand that's creating the New Zealand currency to be stable. And if it's stable and you have a currency like the Canadian that has weakness, you're going to get strong rally in the New Zealand CAD. Now, I'll be honest with you. I'm going to be real honest with you. I didn't expect the New Zealand CAD to move in the move that it's had over the last 2 months. It's been, in fact, it's been very bullish over the last 2 months, heading into the third month right now, without any sort of corrective move. Now, I'm going to go ahead and see if I'm going to pick up that period in a minute right here as we go ahead and take a look at the next setup. And I'd love to talk about the New Zealand CAD. So let's see if it's a pair that I'm going to actually get this morning to go ahead and look to trade. So let's see here. I thought I was going to get it. All right, so it's not that. It's the Euro US dollar is my pair right here. So let me jump into the Euro US dollar. And let's go take a look and see what's going on right here. All right. So what is my view on the US dollar itself? I believe we're going to see some dollar weakness. So that means I'm already going to see the Euro US dollar rally against Euro rally against the dollar. But I know that we're in a risk on environment. But even though we're in a risk on environment, we can see corrective moves in the market, which means that we can see a bearish move on Euro US dollar, but that will only be in the short term. So if that's the case right here, let me go ahead and take a look and see what's going on here in the market. This is the, I'm going to go to the daily. And I think I'm going to go ahead and do some housekeeping on this one right here, Cam. So let's do this. Let's go ahead and clean up a little bit on this. And now that we've done some housekeeping, let's go ahead and I want to focus in. I really want to focus in on what's going on here in the upward swings. So here is my first swing going up. And I did notice that the market did come to the 1.618, and we created that high. And then we're going to go ahead and look at the next swing going up right here. But before I do, I noticed that there's some inside structure, and I want to focus in on the inside structure as well, which looks like this. And so here we can see that we've still got room for price to move up here to this level before we see some bearish movement. And I'm well aware that we have sort of a rising wedge appearing right here that may create some concern for a lot of traders right here. So it's a little wedged up here right here. So it's a little tough trading the Euro US dollar. And normally when you see a rising wedge, price wants to move down and take out that low, and it moves pretty quickly to that level. That also could also retest that 1.68 of the previous swing right here. There could also be a factor there. But if we can get a little push up here to that 1.27, that should be what we're looking for right there. So let me go down to a 15. And let me take a look and see if I can find anything here on the 15 that's even worth trading. Well, I think we might be heading into a little bit of a corrective move. So even though we're in a risk-on environment, I think we're in a corrective risk-on environment right here, where we're seeing a little stronger dollar at the moment right now with that push of that euro. So let's take a look over here. And Cameron, I'm going to say, based on what I'm seeing here, that price could push down another, so 36 pips right there. So let's go ahead and sell. I want to go ahead and sell the Euro US dollar and see if we can get back down to that support level. It's tied up within this rising wedge, but we've got room for price to move back down to this support level right here. And the reason why I'm going to go ahead and sell it is because if we do break above, then yeah, we'll add on some more positions right here, and we'll protect ourselves by making sure that we manage our risk correctly, so we can go up to this level of resistance right here, and then we're going to go ahead and retest a breakout point. So I think we've got about 20 pips. So yeah, go ahead and sell on the euro US dollar.
Yep, sold.
Okay, so traders, if you want to check out our Telegram channel down inside the description, check out the Telegram channel, get connected on that, and you'll see all the trades that we implement. Every trade that we go ahead and place, you will get that inside the Telegram channel, and you'll get alerts on that as well. Again, remember, this is all for educational purposes only, just giving you a quick overview of how we look at the markets and how we address the markets and break it down. Now, I do want to go ahead and talk about how I manage my risk. Before we go into the next currency pair, I want to give you a little bit of insight of how I manage my risk and how I can keep myself a little more calm when we go through drawdowns, as we've been going through. If you follow my trade ideas and we're going through some drawdowns, how do I stay calm through those drawdowns? Nobody likes losses, number one. Nobody likes drawdowns, number two, because it makes you feel uncomfortable. But you have to get to levels that you feel comfortable with. And so what I do is most of the time, I trade with 40%. Actually, in fact, it can vary, but 40 to 30% of my capital. What does that mean, traders? What does that mean? That means that if I've got a $10,000 trading account, all right, if I have a $10,000 trading account, I will place, and I'm going to say this clearly, I'm going to place only 40% in my trading account. I will keep the other 60% in my primary account that is going to be used for margin if needed, which means that, traders, I'm putting 40% into my account, which will be $4,000, and I will be trading $4,000 however I want to trade it, which means that if I want to trade this aggressively, if I want to trade my $4,000 aggressively, then I can go ahead and trade it aggressively. If I choose to trade it conservatively, then I may never ever need that extra 60% of margin or capital that I have in my primary account. I may never ever need it. But if I do choose to trade this aggressively, okay, then I might at some point need to pull some capital from my reserve and go ahead and fund my account just to keep my margin levels good. Because what's very important is that I maintain good margins so that I can continue to trade the strategy that I'm following consistently. So the thing is this: if I go into a drawdown and let's say I'm 50% down on my account, if I'm 50% down on my $4,000, then what am I overall down? I'm overall down. You could take that and you actually divide that. You take that and it's 40% of the capital, right? So if I'm 50% down, and that's 40% of my capital, then that means that I'm actually only 20% down. All right. So if I'm 50% down, that means I'm only really 20% down. It's actually let's do this. Yeah. 20% down. I'm just using my calculator here because I couldn't do the math. Yeah, so I'm right, 20% down. So 20% down is what I'm really at. But what happens is when I get to a 25% drawdown on my overall portfolio, which means that if I have to pull in all my capital, now if I'm trading with $10,000, what would be 25% drawdown? If I get to that, it would be $2,500, right? $2,500 is going to be 25% of my overall capital. Remember, traders, you always got to when you're investing, you always got to look at how much capital do I want to invest with X amount of service or X amount of strategy. What is the total capital? It's never going to be, well, I'm going to take my total capital and I'm going to put my total capital into the market and I'm going to trade that aggressively. Because once you run out of money and you need more margin, you've got no other options. You've got nowhere to go. All you've got to do is just cut your losses and take losses, right? So you've got to go ahead and trade only a portion of your capital Even though you're saying, but that's not all, my whole portfolio. No, it may not be a whole portfolio, because if you don't have additional capital, you need to make provision. So if things go wrong and you need more capital, this is going to help you avoid margin calls. All right, they call it closeouts. All right, it's going to avoid closeouts. It's going to avoid stress levels. All right, it's going to keep your stress levels lower, because ultimately you're looking at this, and this should be saying that, hey, I'm comfortable, emotionally comfortable, risking X amount percentage on my portfolio. Because if you're not comfortable with risking X amount percentage of your portfolio, then, my friends, you are over leveraged. Then you should be looking at changing that risk, so you don't get to a point where you're uncomfortable with your portfolio. And so, for everyone to note, when we get into drawdowns, any type of drawdowns, note that drawdown is only it's a smaller percentage of what my overall portfolio is. And so, am I comfortable with a 60% drawdown of my initial capital? Yes, I am. Do I like it? No, nobody likes drawdown. Nobody likes to go through that. Do I like it? No. But what I have done is I've accepted it financially and I've accepted it emotionally. Because if I don't have those two acceptance, then I'm going to be completely stressed out during that period. And the one thing that you have to understand is everyone has different risk tolerance. It doesn't mean because I'm comfortable with a 60% drawdown on my initial capital, not my overall capital, but my initial capital. It doesn't mean because I'm comfortable with a 60% drawdown that you will be comfortable with that too. So remember, everyone for themselves, right? You have to establish what your comfort zone is, what your risk tolerance is, and you need to go ahead and manage your risk according to the way you feel and that you're comfortable, not just emotionally, but financially as well. Because everyone's got a line in the sand where they say, well, this is it. When we get to that point, I can't risk anymore. I've got to cut my losses, right? What line are you at? What is your line that you have drawn in the sand? You're saying, hey, I'm going to cut my losses at that point. I know that I can take a 30% loss on my overall portfolio and still recover and not hurt me financially, because it might take me 3 months to recover that. But I can recover. I can get back in the market. I can readjust. And I can make things right, and I can recover and make that 30% back if I trade it properly and aggressively. But the thing is this: maybe you can't. Maybe you don't feel that way. Maybe you don't have that emotional drive. Maybe you don't have that sort of experience to know that when you're at these drawdowns, how can you recover from that? So very importantly, make sure, traders, and very, very important, make absolutely certain that when you going in and you starting off with your portfolio and you're following a strategy or whatever it is, make absolutely certain that you're starting off at the lowest level of risk, so that you can build yourself into it and increase the risk as you get more comfortable with it, as you understand it better, as you build up some more equity on the side. That's how you got to start. Too many traders are jumping in head first, thinking, okay, I'm going to go strong and aggressive. They don't have any provision. They don't have any capital available. They're taking everything they have and they're trading it like that's the only thing they've got left, and this is the only way to do it. It's not. You have to make sure that you manage your risk properly. And unfortunately, I'm not a CTA. I cannot advise everyone and break everyone's trading account down and say exactly how you should be trading your account. That's going to be on you. You've got to go ahead and manage that. I send out trade alerts. Oh, see, trades ideas. We send out trade ideas. How you manage it is up to you. I know how I'm going to manage it, and I think I've been very clear about how I do things. And I want to be very transparent about how I do things. And yes, when I get to a 25% drawdown on my overall portfolio, yeah, I'm going to start thinking about possibly cutting some positions. All right. But that depends, of course, what pairs I'm in and what I feel about that pair at that point. At a 30% drawdown on my overall portfolio, maybe I'll do some cut losses and decide that's it. Cut a loss, maybe take a pair, take a 10, 15% loss on a certain pair and make a decision and say, that's it, I'm cutting my losses on this. I'm going to work it back, but I'm going to cut my losses. I'm not there yet, but if it gets to that point, then sure, I will make that decision when the time is ready. So remember, traders, you're responsible for your own trading account. If you're following trade ideas, remember they're just trade ideas. How you manage your risk is up to you. Now, and I've been very transparent about how to do this and giving you options of how to do it, but I can't do it for you. That's what you're going to have to do. Okay. And so listen here, we care about you. We care about your how you care about your success. Your success is our success. But very importantly, one thing has to be clear. The responsibility of how you manage your risk is up to you. If you choose to trade aggressively, the responsibility of higher drawdowns will come with the package. It is what it is. All right. It's great when you're making money. It's great when you're making 15, 25% a month. It's fantastic. It's not so great when you're seeing drawdowns of 50%. But remember, that comes with the package. All right. Now, with that being said, let's go ahead and spin the wheel on the next pair. Let's see what you got here. Cameron, so I finished the euro. Let's go ahead and spin the wheel. And let's take a look right here.
I see your camera went off, by the way.
There we go. Go, Cam. New Zealand CAD.
Okay.
All right, perfect. And by the way, traders, if you're hearing my grandson in the back there with Cameron, man, he's just an adorable kid, man. He's just got verbal diarrhea right now. He's chatting away, and he's just loving it to bits. So he's starting to learn a little couple of little sayings and so on. And so if you're hearing in the background, you know, God bless that kid. All right, there we go, Cameron. You go first.
Thank you. Yeah, he definitely woke up on the good side of the bed today. All right. So looking at the New Zealand CAD here, we do see that price is sitting at this, well, not sitting, but was just testing the support here of these lows. Okay. So looking at the 5-minute, we do expect price to come out and take this high right here. Okay. New Zealand CAD, we expect this price to come out and take out this high right here. Now, I'm anticipating the New Zealand CAD to keep moving. I have this key supply zone here, in the zone here, in this red zone, and until I see price get into here, I'm not expecting a huge pullback until we get price to move into this target area over here. So, looking at my 50-minute time frame, I see that we have created these higher highs. We're moving here. Let me go ahead and put a trend line here. There's that. Price came and tested these lows of the support on the lower time frame. We are getting some negative divergence here. I mean, it's pretty choppy here anyway, so you can tell. If we look at the 1 hour here, we can see on my MACD as well here. We can see these lower highs. Pretty flat here on these highs here. So we should see some pullback here, taking a look at the 50-minute time frame, but we're just pretty close to support here. Now, I'm going to go back to the 5-minute, sorry, not support, but resistance. I'm going to go take a look here and see how much pips it is to this high right here. All right, now he's not happy. All right, so there's about 16 pips just to this high right here. So by the looks of this, if we get price to go ahead and just break through this high, we could possibly hit off 20 pips. And it's unfortunately it's very choppy right here. So I'm gonna stick with the buy here. I'm expecting some more rally before we get a pullback here. I'm gonna go ahead and buy the New Zealand CAD.
All right. Now I don't like that. I don't like the fact that you're buying, but I want to say this for those that are watching and we're selling New Zealand CAD. I want to just say this. When we look at trade opportunities here in this morning session, remember, it's what we're seeing right now, what we can take right now. And the markets are moving 20, 30 pips in both directions all the time. So it doesn't matter we are holding on a long-term position based on a sell on the New Zealand CAD, looking for the big correction move. It's okay to look for like short-term profits. Cameron jumped in the trade yesterday, putting a buy on the New Zealand CAD in his trading room. And I'm like, whoa, I don't know, buddy. I don't know. The thing's going to drop like a – what happened? went back up, went up, and took his profit because he saw the shorter term opportunity and he took that. It wasn't about the long term setup, it was a short term opportunity. And so, with that being said, I'm going to go ahead and address the New Zealand CAD right here, just from a longer term perspective. What is it that we're looking at based on why are we selling New Zealand CAD at the moment? Why are we holding on to some sells? Well, remember, traders, I trade support and resistance. Now, when I say support and resistance, don't just think blandly and think it's highs and lows. When we trade support and resistance comes from every part of the trading tools we use. Support and resistance comes from trend lines, Fibonacci, extensions, and retracement. It comes from pivot levels. It comes from you could use Fibonacci fans. You could use. I don't use that, but you could. The Fibonacci, or at least support and resistance, can come from many things that you can use to identify and analyze the market. So when I say support and resistance, just realize I'm not talking about just tops and bottoms, all right, or highs and lows. Okay. Now, when we trade support and resistance, we're also trading market cycles, which means the market does this, right? When we're looking at a market cycle, we're looking at, I just changed something over here. Oopsie. All right. When we're looking for market cycles, we're looking at something like this. All right. Price goes up, price comes down. Price rallies up, price comes down. Price goes up, and then price comes down on a deeper correction. So we're constantly looking at these type of wave structures. So the reason why we're short on the New Zealand CAD is not because we looked at the larger picture. We realized that the New Zealand CAD was going to rally. But what we saw on the internal structure is that we saw that price was actually at a top, and we're expected a corrective move. We expect the market to dip down and then rally back up and dip down again. But we saw a corrective move. And selling at a top is okay if the market continues, because normally this becomes a resistance level that then becomes support for the market and then goes back up. So if you go and add in multiple positions here, you're eventually going to get back to that level and go ahead and test it and then rally off. The thing with the New Zealand CAD over the last month, it hasn't done that. It hasn't pulled back. It hasn't given us a retracement. It's in fact a month and a half right now. And if I go to the New Zealand CAD larger time frame, and let me go ahead and flip it over here to, I'm going to go to the monthly. Check this out. I want you to see something here. This is what's real interesting about the New Zealand CAD, right? And you think, Gary, why are you still trading this New Zealand CAD? Well, I want you to look at this right here. There has been great opportunity, and I'm not going to go ahead and pull it up right here, but I'm going to hide. Let me just hide a couple of things here. I want to show you this. If you look at the New Zealand CAD, based on its history, all right, New Zealand CAD's actually gone ahead, and when it rallies up, the rally that we've seen is anywhere between 1,000 pips to 1,300 pips. 1,300 pips has been the maximum that has gone ahead and rallied up before we've seen some sort of correction. And the corrections have been anything between 50 to 60%. So when we see the market going up and we notice that it's moved up 1,000 pips, there is a correction due. It's happened all the time. Look at this. We had a rally, we had a dip. We had a rally, we had a dip. We had a dip, we had a rally. We had a dip, we had a rally, we had a dip. These are corrective moves going back and forth right here all the time. So every time the market moves up this 1,000 pips, and it's happened maybe 3 times a year, when we have this happening right here, we do get our corrective moves. So it doesn't really matter. And so this is no different to where we are right now based on what history has shown us. So we're looking at this and we're going, all right, this is the monthly chart. And the market has moved up from, let's get this tool up here now. The market has moved up, how many pips so far? 1,000, and since the low, actually no, I didn't even get it on the low, hold on. All right, there we go. So since the low, we've moved up 1,100 pips, just a little bit more than 1,100. 1,100 pips. We're at the max out. We're at the historical highs that this pair moves. And so do we expect this pair to pull back? Now, I've heard people send me emails and texts and so on. Gary, I've heard from another trader that we go into 86, not 86, sorry, 88, 8800. Some say we're going to 90. And I'm like, yes, I mean, sure, but not before we see a correction move. I don't believe we're going to see 90. I don't believe we're going to see 88 until we get a correction move, because that's really past the norm that we've seen, the max that we've seen historically. And I know that we're going to see some higher oil prices pushing up. That's going to create some strength in the Canadian dollar. We've seen the Canadian dollar, or the Canadians actually raise their rates 50 basis point as well, because they also see that there are a couple of things that they need to do to strengthen the currency. Look, the currency it's not good. Any country, it's not good to have a weak currency. All right, it's not good. All right, it helps with tourism. It could help with GDP, but it's not overall good to have a weak currency. Nor is it good to have a very strong currency, right? So there is a balance that they want to try and do. The same thing, of course, with JPY. We've seen that JPY. How much rally did we see over the last 6 months, 6 to 7 months on the JPY crosses? And what happened? It's pulling back, and it's pulled back quite a bit. We're going to see some correction. We just have to be patient, but also at the same time, we've got to manage our risk correctly so that we can be ready for that corrective move. Now, take a look over here. What is the levels that I expect price to move? I want to go ahead and show you this right here on the monthly. And I know I'm taking a little bit more time than I should on this pair, but I really think it's important that we talk about this, right? So if you take a look over here, and you look at this pair right here, and I go ahead and I'm going to put in, I'm just going to draw a line, a horizontal line, and I'm going to go ahead and pull it up from this area right here. And there it is there. I go ahead and plot it in right here. Now, you know what? Let me just do some housekeeping and clean up this this chart here. Let's do this. So I can show you what I'm going to show you. So this right here is the level right there. Why am I putting that level in here? Because I want you to see something, okay? Even though the market has spiked through that level, all right? It's acted as resistance here. It acted as support there. It acted as resistance here and a little bit of support too. There it acted as support. Here it acted as support. Here it's acted as resistance and support. Here we've had a resistance level. Here it's had a support level, here a resistance level, and guess what? We're back here again. Now, the market, the price has moved through this level a little bit right here. But this is a monthly time frame, which means that I've got the whole month to look for, to see if price can trade back below 86.31 or 86.33. So by the end of the month, if we've traded above that, does it mean it's broken? No, not necessarily. Because we've seen multiple times how price has gone through that level, right? Gone through that level, and then come back and gone back the other ways. But this is an important level. This is important. It's going to take a lot to push and hold it above that level. And nothing in the market right now, even with the good unemployment numbers with New Zealand, even with good GDP, even though we've got good tourism, that's not enough to keep this pair against another pair so strong for so long and not have any sort of correction. So there is correction due. And so when we do see the market starting to correct right here, all right, we're going to look at this level, 86.33. We're going to look and see if price breaks below that. And so there's a couple of things that we can go ahead and add in on here, right? We can go ahead and add in some trend lines and take it from the top right here. We're still far away from that. But if I go ahead and connect the bottom, you can see right here, we've got a trend line going down, all right? Let's go ahead and take this trend line and let's go ahead and make it a, right, look at that. All right, so the market's going to, it's going to go. So those traders calling 90, calling 88, 0.88, 0.90, those traders call it, yes, we're going to get there. But what this market is due is a corrective move back down to support right here, and then possibly go ahead and retest and go ahead and test that 88 that 90 level that traders are looking for. And listen here, if you're going to call 88, at least give me a reason why it's going to go to 88. Not just because, oh, it's just going. It can't just be going, all right? There's got to be a reason. There's got to be structure. There's got to be the information out there that's going to be validated to push it to 88, all right? But I can validate correction. We are in extreme overbought conditions, and I know that even with an extreme overbought condition, the market can continue to rally. But here on the monthly, so here we are. We're on the monthly. Let's go down to the daily now. Daily shows that we're due for a high, right? The MACD is actually telling us right here that we're setting up for a high. What does a high mean? A high means that we're going to start seeing a top. Now, if you look at the MACD over here, not the MACD, the oscillator over here, the oscillator's been in an overbought condition since it started breaking out over here, around about 80. And guess what? This is where we saw the market to pull back, and it never did. And this is why we got caught up in this trade, is because we were supposed to have seen a corrective move, and then the rally, then a corrective move, and then the rally again. What it's done is it's just gone in one big move. And you know what? It can happen. It can happen that you can get it wrong. I've never advocated that I'm going to be right all the time, but I'm going to say when I am wrong, I'm going to make sure I've got good equity management in my trades so that I can survive that, make money on the other trades, all right? Make money on the other trades. So if I have to pull the plug on a position, if I have to pull a plug and take a 10, 15% loss, then have I made enough money on the other pairs to be able to subsidize that so I can go ahead and restart? And so that comes back to how are we doing, all right? Last month we made 23%, not trading the CAD Swiss, not trading the New Zealand CAD, but trading the Euro US dollar, trading the US dollar CAD, and trading what? Trading the Aussie CAD. So we've made, out of 3 pairs, we've managed to cover 23% last month. That's going to help me to make a decision and say, hey, you know what? Maybe it's time to cut some losses on some of my positions, take a 10 to 15% loss, but it's recoverable. I can make it back without any years, all right? And if I have to take that 30% loss, then that means in 2-3 months from now, I'll be back on track again, and we'll be okay. So again, very important. I thought I'd just go ahead and talk about the New Zealand CAD. I know there's a lot of traders that are caught up in the New Zealand CAD, and I'm one of them, all right? But there is light at the end of the tunnel. Although it looks like it's a forever rally pair, it's not going to be that way, all right? There is going to be correction, and when it does correct, we're going to go ahead and make some money on this trade. Now, let's go ahead and jump into the last couple of pairs right here, or to the last pair that I believe I've got to cover. US dollar CAD right here. Now, before I do, Cameron, just give us the short and long of where we're at right now regarding our positions that we're in right now.
Yep. So you went ahead and sold the Euro US dollar, and we're up 12 pips. I sold the Aussie CAD. We're up about 3 pips. And I just went ahead and bought the New Zealand CAD, and we're down 3 pips right now.
Okay. All right. Perfect. That's where we're at with those positions. And finally, as we go ahead and take a look at the last currency pair of the morning, which is the US dollar CAD right here. And let me go ahead and take a look at this right here. And traders, if I'd gone ahead and sold the Euro US dollar, then naturally we would think I would go ahead and buy US dollar CAD. Maybe it's not set up technically for us that way. Now, housekeeping. Let's go ahead and clean up. Let's go ahead and clean up house right here. Always doing some housekeeping. Go to the daily. I actually go to the 4-hour right here, and I am seeing resistance up here at the top. Sort of low just being created right here, which means that we want to see a push above the high. So there's a possible push that we're going to see on the dollar right here. Now, if that's the case, let me go back to my daily. Let me look at the overall direction. No, overall direction, traders, overall direction is still going to be bearish in my opinion. All right. So if I look over here, I do see this swing right here from there. I do see price missed out on this level. It came short of that, but also more importantly, it came up here and it tested that level there. All right, and it traded back above that level. So it means that we're very much going to be targeting this level up here at the top. So let's pay attention to the upward move. Let's go to the 1 hour. And I'm going to go ahead and pay attention to the upward move. I want to just see where I'm at based on market cycles. So here is the first move right here. And it looked like I may have caught that shy of that. There's resistance there. The 1 hour is overbought. Hey, you know what? Let's go to 15. I might just do a counter reaction here. Yeah, I'm going to do that. I see support right here. 80 pips. Cameron, let's sell US dollar CAD. So I'm selling US dollar CAD. The reason I'm selling US dollar CAD right here is because I noticed that resistance. There's not a lot of upside potential technically. And so I'm looking for the market to go ahead and bounce back down. Now, that might be different to what, of course, we are seeing on the... Sorry, yeah, I'm going to sell US dollar CAD. Now, it might be different to what we've seen on the US dollar CAD, right? I mean, the Euro US dollar. Because remember, what did I do on the Euro US dollar? I went ahead and I sold, I believe, Cameron, I sold Euro US dollar, right?
Yes, you did. So
right.
Usually you go opposite.
Right. Normally you go opposite. So think about this way. If I'm not going opposite, then there's something else happening, and it's not the dollar that's creating the influence. It's the Canadian dollar. Because if I am looking at a New Zealand CAD short, I'm looking for New Zealand CAD to sell off, and in fact, Cameron went long on it, but me, overall, I'm looking for New Zealand CAD to go short. But I'm also looking at Aussie CAD to go short as well. I believe that will go short. Then this means that the Canadian dollar is what I'm expecting to get stronger. And if the Canadian dollar is getting stronger, then I should be selling US dollar CAD because of strength out of the Canadian dollar. So even though the Euro US dollar I'm selling, remember, Euro US dollar selling, expecting stronger US dollar, but yet I'm selling US dollar CAD, expecting CAD strength to push it lower. So there is and there is a hedge between the two right now, because either way, I'm going to be making money on both of them, or I'm going to be making money on one, losing on the other, and then making on the other. So it is a hedge position. We'll see how that plays out. All right, so that trade has been implemented. Cameron's gone ahead and posted that in. So we're in on 4 trades this week. We've placed 4 trades this week. The CAD Swiss, we're currently holding on the CAD Swiss, and I'm going to let Cameron go ahead and do a little review on the CAD Swiss, and I'll take it over right here. Just take a look at the CAD Swiss and see where we're at with the CAD Swiss, Cameron. What is your long-term outlook on the CAD Swiss right now, or your midterm outlook on the CAD Swiss?
Yep. And I've been talking about this in my VIP shows. So yeah, we can take a look at this. If I go ahead and just go to the daily here, you can see we are moving into a huge consolidation zone here where we have some bottoms here. Okay, so we're expecting price to move in this zone of consolidation, and we expect a reversal after price does test this consolidation zone. If we look at the daily, it's setting up with a beautiful positive divergence there as well. Same thing with the 1 hour. Let's go zoom in here. We can see we're getting oversold position. But now, do I expect a huge rally on the CAD Swiss? I don't know. I can't predict the market, but I do know that we're in a consolidation zone, so I can expect some choppiness. I can expect some sideways movement in the market as it's still testing this consolidation zone before we get any reversals. Now, looking at the 1 hour, I did get excited that we did look like we were trying to break through this high right here. And we just had a 1 candle close in here, and it just dipped right back down and broke through support here. So we're still seeing some more bearish movement in the CAD Swiss. But we are in this consolidation zone. There's a lot more still to the downside. So we can still expect the CAD Swiss to start moving bearish and sideways as it's collecting some liquidity in this consolidation zone before we get some break of highs.
All right. Cool. I like that. All right, very cool. And then if it does go north without doing that, it's already in the area where it's looking like it's picking up a lot of buy opportunities, right? So if it's going to go down further, then fine. Except that there's going to be a little lower push, but overall, you still expect an upside rally on that.
Yeah, eventually I'm expecting a reversal to go for price to go bullish, but I'm still expecting some downside movement. Right now, obviously, I see some divergence on the 1 hour, so we could get some pullback, get a nice bullish move here back into this range bound. But other than that, I still anticipate there's still going to be some downswings before we get that reversal that we're actually looking for on the upside of breaking through these highs.
Yep. Okay, cool. And so as I go ahead and just reconfirm what Cameron's seen here, and just go ahead and break it down here on my chart. So let's go ahead and pull that up. And if you take a look at my chart right here, you can see that we're in this a big free fall right now, right? And we're at the end, or at least very close to the end of that setup right here. We just closed out a position. Cam, what was it? The US dollar CAD?
What's that? Oh, the used dollar CAD close.
Yeah, we just closed it out.
It probably did. It was, yep, it did close. It was moving
That was
quick
a
as
fast
soon as
move. I just
yeah, it was
spoke about that.
moving.
All right, so I just picked up that right there. I just picked up that trade, and we just picked up a very quick move on that, which I'm pretty happy on. And let's just take a look and see what it looks like before, and I'll go back to this pair right here. Looks like it was just a pullback off this. This is a daily. Let's go to 5 minutes and see. There it is. So we sold right here, the top right here, and boom, it went back down here. We picked up our 20 pips very quickly on that trade. So that was a quick trade. In that case, what is the euro doing? Okay, euro pushed a little bit bullish on this, so it hasn't. So the dollar is being influenced right here again. Whether we pick up another position right here and drop back down again, it's still going to be good. All right, let's go back to the CAD Swiss right here. Let's go back to CAD Swiss. Let me see something. Okay. All right, CAD Swiss. So CAD Swiss right here, as you can see right here on my daily, you can see that we've got this big falling wedge at the moment right now. A huge falling wedge. So I'm going to say this. Fast down, fast up. When the market starts pulling back up, get ready for that pullback because it's going to move pretty fast going up right here. So I agree with Cameron that, this right here, this liquidity test that's testing right here, sure. There's definitely some liquidity right here. We're in that area right now, Cameron. If you look at the monthly, daily right here, we're right inside there right now. This is all that liquidity right here that the market's busy testing right now. So with that being tested, we know that price is going to eventually turn around and head north. And so we're in that level there where price is going to anticipate that rally. So I think we're pretty much there. And again, just like we saw on the New Zealand CAD, look over here. We've seen the oscillator starting to move up. So and on the MACD. And so the MACD is actually creating a confirmation that we're going to start seeing a bottom. And if that's the case, and we've seen this negative positive divergence here, we should be expecting rally out of the CAD Swiss. All right, look at over there. We're getting in both ways. We got positive divergence on both oscillators right now. We're getting the MACD going to head. It hasn't confirmed yet, but it's going to confirm that we are heading into a low right here, which means that price is going to go up to create a high. We could expect that rally. All right, MACD hasn't converted yet, but it's definitely right about there. Okay, so I'm also comfortable with the CAD Swiss, and let's say traders, there's nothing more I can say other than we've got to be patient. We've got to be patient. I mean, I can go ahead and break this down and go down to the 5 minute, the 1 minute time frame and give you every tech movement so you can feel comfortable with your emotions. But at the end of the day, it's going to have to be wait and be patient, right? Don't live and die by the candle, right? Don't live and die by the candle, which means don't on every single candle make a decision. Because if you're living and dying by the candle, which means every tick move of the market, it means you're over leveraged. You're way over leveraged, and you might have to start making some adjustments. Okay, I keep saying that, and I hope that next time when we go ahead and getting out of our positions that we're in right now, and we get flat on our positions, that you really use this as a good stepping stone to how you're going to manage your risk moving forward. Traders, you can make a lot of money and good money from this market, but you have to be smart about how you manage your risk. That's all I can say right there. All right, traders, with that being said, It's been Preachy Friday today. Yes, it has been. All right. And I think Preachy Fridays is probably what we need sometimes when it comes to, trading the markets. So this is where we're at. Good luck with your trading, my friends. We're in. We're going to see how this plays out. We'll be back again next week, Friday, just before Christmas. And we'll go ahead and have another. No, we're not going to be back Friday. No. Sorry, next week, Friday, we're not here. Next week, Friday is actually my birthday. And I'm taking out the family. We're going to go ahead and play some golf, enjoy a little bit of a break of a little bit of a break from the markets. And so we will not be back Friday next week. All right. I'll be out celebrating my birthday, but you have a great trading week. Cameron, last words?
We will have our VIP sessions next week, so I will see the VIP members in the live sessions next week. So I'll see you
Very
guys
good.
then.
Excellent. All right, guys. Thank you for your time. Have a fantastic week and a great weekend. This is FxBigDog and Cameron saying cheerio.